Visa, you know the name, you probably have their card in your wallet. It's a company that's so big, its network is basically part of the plumbing of the global economy. So when they drop their earnings report, it's more than just a report card, it's a real-time peek into how people like you and me are spending our money all over the world. So what's the story this time? Let's dive in and decode these numbers. I want to start with this quote from Visa's CEO, Ryan McInerney, because it really sets the stage. This isn't just about swiping plastic anymore. He's talking about AI, real-time payments, tokenization, which is just a fancy secure way to hide your card details, and even stablecoins. This is the future they're building. The big question is, do the numbers today back up that big vision? Okay, so with that future-focused vision in our heads, let's get down to brass tacks. The question on everyone's mind? How did Visa actually do this quarter? Here are the headline numbers. First up, the big one, net revenue. In just the last 3 months, Visa pulled in a whopping $10.7 billion. Just let that sink in for a second. That number alone tells you everything you need to know about the incredible scale of this company. And here's the other magic number that Wall Street obsesses over: $2.98. This is their non-GAAP earnings per share, or EPS. All that really means is it's a key measure of how profitable the company is, how much money they made for every single share of stock out there.
Now, those are big numbers for sure, but the real story, the thing that gets investors excited, is how they stack up against last year. And wow, look at this. Net revenue shot up by 12%. Their adjusted profit, or non-GAAP net income, grew a really solid 7%. And that earnings per share we just talked about, up 10%. I mean, across the board, these are just powerful signs of really strong, consistent growth.
Okay, so we've seen the impressive results, but where does all that revenue actually come from? Let's pop the hood and take a look at the engine that's driving this massive financial machine. Yeah, this is the crucial question, right? A 12% jump for a company this size is just huge. It's not just one thing, it's a bunch of different factors all clicking into place at the same time. So let's break down what's really going on here. This right here, this gets to one of the most fundamental pieces of the puzzle. This shows the growth in what Visa calls processed transactions. Just think of it as every single time someone, somewhere on the planet, swiped, tapped, or clicked using the Visa network. That number grew by 10%. That's a lot more activity. Okay, this is a really important distinction to understand how their business works. Think of it like a coffee shop. Processed transactions is the number of people who came in and bought a coffee. Payments volume is the total amount of money all those people spent. For Visa to do well, they need both of those numbers to go up. And this slide brings it all together beautifully. Payments volume, so the total dollar amount spent, up 9%. Processed transactions, the number of times we all paid for something, up 10%. And then, check this out. Total cross-border volume jumped 12%. That's all of us traveling internationally and shopping online from other countries. That part of their business is super profitable for them. So seeing it grow so fast is a really, really good sign. All right, so you've heard me say this term non-GAAP a few times now. And if you've ever looked at a company's earnings and seen two different profit numbers and thought, wait, what's going on here? Well, this next part is for you. We're going to clear that up right now. And honestly, it's a great question. It's something that can trip up pretty much anyone. The answer helps us get a much clearer picture of how the business is really doing, separate from any weird one-off stuff. So here's the deal. Think of GAAP as the official by-the-book number. It follows all the standard accounting rules, and it includes everything. Non-GAAP, on the other hand, is like the adjusted number. Companies use it to pull out certain things they think are unusual, like a big legal settlement or something, to show you what they believe is a truer picture of their day-to-day business performance. So, what exactly did Visa pull out of their numbers this quarter? Well, the single biggest thing was this, a nearly $900 million provision for legal matters. So, by showing you a non-GAAP number, Visa is basically saying, hey investors, here's how we did if you ignore this really big but kind of unusual legal cost. And this table shows you exactly how the math works. It's super simple. You start with the official GAAP number, the $2.62, then you add back the 36 cents per share that was taken out for that legal stuff. After one other tiny adjustment, boom, you land right at the $2.98 non-GAAP number we saw at the beginning. It perfectly bridges that gap. Okay, so Visa's business is on fire, it's growing, and it's super profitable. The next logical question, especially if you're an investor, is, great, so what are they doing with all that money? Let's see how they're sharing the wealth. Get a load of this number. $6.1 billion. That's how much cash Visa returned directly to its shareholders in just 3 months. I mean, that is an unbelievable fire hose of money flowing straight back to investors. So how'd they do it? Well, you can see it right here. The lion's share, almost $5 billion, went to buying back their own stock, which helps push the share price up. And the other $1.1 billion was paid out as a good old-fashioned cash dividend directly into shareholders' pockets.
And if that wasn't enough, they also announced a big fat 14% increase to their dividend going forward. You know, a double-digit dividend hike like this, that is a massive vote of confidence from the people running the company. It's them signaling that they feel really, really good about the future.
So what an amazing quarter. It's in the books, but in the world of investing, it's always about what have you done for me lately. The focus immediately shifts to what's next. So let's take a look at the road ahead for Visa. This slide lays out Visa's own official forecast for the next year. And honestly, one word just screams out at you: consistency. They're telling the market to expect low double-digit growth pretty much everywhere: revenue, expenses, and most importantly, earnings per share. The message is clear. They think this powerful momentum is going to keep on rolling. And that brings us right back to where we started this whole thing. We opened with the CEO's vision of this new world of AI and tokenization. We've seen that the current numbers are fantastic, and their forecasts look strong. So it all boils down to this one question. As the world of payments gets faster, more digital, and way more competitive, can a giant like Visa keep innovating and keep this incredible momentum going? That right there is the billion-dollar question.